All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. Let's go out and take a look at the market open here and how some things are going. And you know me, I like looking at what some of the major themes are. And today there's a pretty major technical theme. And what's interesting about that theme is that we saw it within a sector a week ago. And I have a chart of ConocoPhillips up here. And ConocoPhillips, bounced here in December, made a nice move higher, right? Very bullish type move. And all right, it's going to take a break. So it takes a break for a couple days, and then we get this big bad bullish engulfing candle, and it's off to the races again, right? Next day, gaps up, just kind of hangs out, where it gapped up. No real new buyers really stepping in, but, no real sellers really coming in. And we get this this pattern here. This looks an awful lot like the market did last week, right? Okay, and so this is happening before the market did, and I have covered up what happens next. But this is a pattern that is typically very bullish. Except if there's a gap down. And if there's a gap down, it changes the nature of it. And we can see the next day here for ConocoPhillips, there was a gap down and sell. What's that create? That creates what's called an abandoned baby or an island reversal, whatever technical book you're reading. It may have a little bit of a different name, but the principle's the same. Where basically you get a gap up, you get this abandon action where, there's no real buyers or sellers stepping in this day. Next day, gap down and leaves those that were involved up here basically abandoned. And, this is something that is not super common, but tends to be really accurate. In fact, this is something that, for those of you who remember Carl Anderson, when he was here, he would talk about these. Every time he saw them, he'd be like, "Jeff, there's one of your abandoned babies," because he knows how much I like to trade them and be involved in them. And I do. I absolutely love it. They're not the highest accuracy candle pattern out there, but they are one where when you're right, generally you're right in a big way because the stock goes a big way in your way. So it's one that we see kind of forming. Now, the thing that a lot of people take from a bearish candlestick pattern is, well, it's a bearish pattern. I'm going to go buy puts right now and expect that, man, it's going to go down my way all day, every day. They're with it. And that's not what the nature of these are. A lot of times there's a little consolidation afterwards. And we saw this with ConocoPhillips, right? As I unfold the next couple days action, right, what do we get? We get 3 days where all the action's inside this downside candle. Did any of it mean a hill of beans? No. None of it meant anything. None of it really changed the significance of the pattern. Okay, and we even saw, this move up on Friday, low volume, right? And then today, okay, gap down with the market and moving below the lows from last week. And so while, yes, it's a very bearish pattern, it's not always the smoothest pattern. It's not always this pattern that you go, oh, okay, you know what? It's absolutely going to go my way right here, right now. And, you feel great, grand, and wonderful about it. It can oftentimes have some of these, some of these little blurbs in it. And ConocoPhillips, that's what we see. Now, I show this because what are we seeing right now in the S&P? Well, we're seeing something very similar, right? Here we go. We have the nice rally. Here we go. Rally, rally, rally. Yeah, we're overbought. Market doesn't care. Off it goes. You know what? It's ready to go. And, then last week it gaps on down. And it doesn't create a fully abandoned pattern with this candlestick right here. It doesn't absolutely abandon it the way Conoco did. Then the next couple days, just kind of futzing around, and then Friday we get this gap up, go nowhere, just sit and spin type of candle, and then today a gap down. And while yes, we could argue that this candle from last week isn't exactly a bearish, or wasn't maybe a picture perfect abandoned pattern. What we see happening over the last 3 days is absolutely picture perfect, and it would rest and fit into the TriStar or evening doji type of pattern here as well. For those of you versed in your patterns and who like those fun little names there, but the principle here is one of resistance. It's one of there's no more buyers left to come in now. Just because there's no buyers left to come in the short run doesn't mean that, the market's just going to get sold and sold aggressively. There still needs to be a catalyst for the sellers to jump in. And, it's one where we've seen a little bit of that here this morning, a little bit, a decent volume, but nothing nothing too heavy there. But overall, we have this abandoned pattern shaping up here on the SPY today. We also have that pattern shaping up for a lot of different stocks and a lot of different sectors. You're going to see this pattern all over the place in the market, right? And the trade is down. The trade is down with a stop on the close from Friday. Right? That is the technical trade. That's the trade that, path of least resistance, good risk reward, and that's the trade. That's the setup. It's down with a stop on the close from Friday. So anyway, that's the overriding theme out there today. And again, it's not everywhere. I mean, you go into utilities and it doesn't look like that. It looks a little bit different. You go into consumer staples, it's going to look a little bit different, right? But even consumer staples kind of had this shape up a little bit last week here with it. Now for the challenge, I'm in some XLF puts, and you can see this pattern is taking place. This is the pattern that's shaping up here, right? We had Friday and we had the gap up and go, and pretty much ended where it opened, and this morning gapping on back down to where the stock has been pretty much ever since I got into my option. But here we have this kind of abandoned pattern, and I don't have time to wait for it to consolidate through here. I needed to break down through here, here this week, and I think there's a decent chance that we will get that, we'll get that happen. But it's something that I need to have happen sooner or later. One of you commented to me that why is the XLF not falling with the rest of the market here today? And I just say give it time. It's one of those where this morning's market had nothing to do with financials, had nothing to do with it. The financials weren't in the news in any way, shape, or form about anything. Right, the catalyst in this market this morning were quite a bit different, and they were a little bit because of global stocks in China and the trade talk worries and Brexit worries and U.S. government worries. Right, that kind of three-headed monster we've talked about. But it also is one of those factors where that created a little bit of selling in S&P futures. But the bigger selling, it didn't happen until we saw Caterpillar earnings. We saw Caterpillar earnings, and we saw a pretty big miss from Caterpillar. That sent futures on lower. Then we had NVIDIA come out, and they pre-announced their earnings. And, when a company pre-announces, generally they either generally they're way off, right? Meaning they're going to pre-announce because they see the numbers already and they're nowhere close to what they are expected to report. And that's when you see companies pre-announce. Generally, it's a negative. Occasionally, you do see positive pre-announcements, but NVIDIA pre-announced, and you can see the volume on it. The volume on NVIDIA is already higher than what the volume was on Friday, right? And, this is just another one where, hey, Friday, the stock opened, it went higher all day. Somebody must have known something, right? Here's Caterpillar, and I say this facetiously, and, it's just one of those where we just so often hear this concept that, if the stock is rallying into earnings, somebody obviously knows something, right? So, you jump on and you get on with those that know something. Okay, they know nothing, right? Who is that? they know nothing. But anyway, I'll stop there before I embarrass myself further. But overall, Caterpillar, with the gap on down NVIDIA, so we have some negative earnings elements associated here with those. Real quick, just want to show you the visual on Caterpillar's earnings and revenue here, and you can see that the earnings per share missed, and it's not just that they missed, right? As a consensus of 298 came in at 255. It's not just that they missed; it's just Caterpillar never misses. I mean, Caterpillar just typically doesn't miss. It's just that's not been their nature, right? On the revenue side, though, they hit, right? But, Caterpillar has been known to sandbag the numbers and then beat the numbers. They missed. Now, it's the highest revenue they've had in a while, right? So it's, very nice. And obviously, there's some future guidance, elements to come into play. I have not gone through the conference call here just yet. I want to do that before making any real kind of big statements about Caterpillar here. But this drop in Caterpillar, it's probably equivalent to 70 to 80 points down on the Dow Jones Industrial here with it. But this is something that definitely some disappointing results. And on the surface, and I do want to go a little further. On the surface, this looks like a different earnings miss than something like back here. It does look very different. It looks very different from October, and I do want to take a much closer look here at it. That said, if the stock is not able to go down after this, right, obviously a day or two, trickle. If it's not able to go down after this, it does set up a nice higher low, but I think that has to be a reactionary thing more than a predict, hey, that it's going to stop right here, at least after what I've seen from the earnings so far. And again, I still have to go through the conference call, and we'll be doing that after this video here. So we have these kind of two earnings drivers here today with NVIDIA, with Caterpillar, and that's why we've seen the market just kind of open up and sell, and open up and just kind of push on lower here. And if I back this out to a 1 hour chart, right? We put this into some perspective. We're still, and I talked about it last week. These Wednesday lows, these are the lows. That's the mark that I think this market has to be wary of. If that level breaks, we could be in for some of that mass, that mass heavy sell type action here in the market. What we're seeing here this morning, it's not that. I mean, just look at my board here, right? You see Bank of America is green, Las Vegas Sands, Wynn Resort, Western Digital, U.S. Steel, American Airlines, Under Armour, right? Masco, they're all in the green. There's some differentiation out there. This isn't a, hey, sell everything and, just blast out of everything because everything's toxic type of scenario. This is a highly differential type of move here today, in the market, and it's one where it's definitely tech-driven. But the other big area here that's driving and making the indexes look worse than what some stocks look is the XLV. And you can see the XLV had this abandoned pattern here as well, right? Gap up, doesn't really go all that much. The next day, gaps down, right? And yeah, it just dinks around for a few days, and then falls on off here today. Now XLV was also one of those sectors that didn't really rally on Friday. We talked about that. It wasn't really participating here, and it's definitely participating in the downside here today, and getting sold off. As several of the big names in the group here, we have United Healthcare down about 1%. We have Bristol Myers here down about 1%, and so we see some of that. Pfizer pushing into some new short-term lows here. We have Johnson & Johnson down just slightly here, but those are weighing on things. But a lot of these abandoned patterns out there, in the market. Now, what's not an abandoned pattern is a story unto itself is Vale, and we talked about this on Friday, and big down move on Friday, and you can see the big gap down here today. Over the weekend, Vale announced that they would have to suspend the dividend to basically deal with the dam burst fallout, which is probably going to be pretty major. That's 51 cents a share. Right, that's what the dividend is. This is a stock that was yielding over 3%. So it was a decent yield. Now suspending the dividend, they basically make it toxic for for several firms to own. In fact, a lot of investing firms out there, in their bylaws, they cannot own something that doesn't pay a dividend or doesn't have a certain dividend level. And so they basically, when a company comes out and suspends their dividend, it's going to be sold. It's going to be sold and sold heavily. We've seen every analyst line up this morning to downgrade it, to basically say, hey, you know what, new regulations coming for Vale, more oversights coming for them. And we talked about that on Friday. How this isn't a one-off. This isn't just a one-off, kind of fluky type of thing. Like a Boeing Dreamliner sitting on the runway at Heathrow Airport on fire. For those of you who remember that, where that's kind of a one-off. This one here, this is now second time, and yeah, they're still dealing with some of the fallout from the first one, and the fallout from this is going to be even greater. It's going to be a mess. Not going to go away for him, and it is just something that to me makes it uninvestable at these levels. And maybe wake me when it's $5, $4, $3, and could get even down to the $2 or $1 mark, depending on what the global economy does. And we have seen what's bad for Vale, good for BHP, good for Rio. Both these stocks trading a little bit higher, but as we talked about last week, both sitting at around resistance here. We talked about Anglo American last week as well. So, definitely a net positive for this group. The more fallout that comes to Vale, the more bonus it is to these particular companies out there. Okay, so anyway, that's some of the stuff that's going on out there today. We do have a fairly full earnings calendar. This is going to be one of the more full weeks of the earnings season, but it's going to be kind of rivaled all the way through next month, all the way through the month of February. We do have AK Steel after the bell here today. We've talked about U.S. Steel, how cheap it is. I don't think AK Steel is as cheap fundamentally, but it's definitely not expensive. You can see both of these stocks, were red at one point here this morning. U.S. Steel going green. But very interested in that AKS earnings report. Whirlpool is always an interesting read-through into Brazil and some of the other emerging markets, so that'll be interesting. I don't know that it'll be very market-moving. But then we start to get into tomorrow morning. Tomorrow morning, Verizon, Triple L, Pfizer will be reported. Lockheed Martin, Harley-Davidson, Biogen will be reporting. And then after the bell tomorrow, AMD, Apple, eBay, some of the big headline grabbers will be reporting after the bell here tomorrow, with Apple being the largest there. AMD, it's a swing trader's love affair here with AMD. Whenever I talk AMD, I always get some very passionate emails, very passionate commentary. People either are super bullish or super bearish. Where I stand, I'm super bearish. But anyway, to each their own there with it. And then we'll get into Wednesday. We'll start seeing Tesla, Facebook, Microsoft, Alibaba, Visa, Boeing, right? We're going to start getting some of the biggest companies from some of the biggest sectors, reporting here this week. U.S. Steel here on Wednesday as well, I believe. And I do believe that after this week, we'll be able to look at the earnings season on aggregate and what has been and make a definitive statement about what this earnings season is. And yes, we will have a whole nother 6 to 8 weeks of earnings coming out, but I don't think we'll see the numbers vary all that different. Statistically, we will have enough of the data to basically say, hey, by the end of the quarter, this is what it's going to look like. And, we will have that here by the end of this week. And I think we will start to see, investors, reacting to that here over the course of this week and into next week. But obviously overlaid with U.S. government drama, overlaid with trade war drama, which, new talks are starting up right now, and overlaid with the key Brexit vote here this week. So all of those kind of ongoing and being overlaid here this week is going to make for a very eventful, very very kind of dramatic week here overall, and one where there could be a lot of information out of left fields coming in, but a lot of that information, they're expecting the pass. They just don't know if the pass is going to be online or not, and that's where bigger moves could potentially happen. I mentioned this morning that pre-market the VIX was up sizably. It was up $1.80 pre-market, up about 13% right here. You can see it's not breaking above the highs from last week. If you're bullish, that's what you want to see. That's exactly what you want to see there. If you look at something like the VXXB, which is taking into account future, it's also not making a new high, so that's fairly bullish there. That would kind of suggest that this pullback is just simply a one-off, right? Same with bullish percent index would suggest that this pullback is a little bit of a one-off, right? So this isn't an overwhelming, hey, you know what, bears have everything. Bears have that chart pattern, but the bulls still have the majority of the metrics, but I do suspect that would change pretty quickly if we start to see this kind of 2610 level, or 2612 level taken out here on S&P futures, which granted is about 20 points away. So if we were to get there today, we'd probably see it bounce off that level and see it act as support in the short run. But ultimately, if that level breaks, I think we are talking about, that full retracement of the market, really kind of coming into play and really being with things here as we go forward. Thanks for hopping on. Have yourselves a great one, and we'll talk to you later. Take care.